What should you do if you owe back taxes to the IRS? Well, it's basically 4 steps. The first step is deciding to take action. You can't ignore back tax notices and balance due notices. If you do, it can lead to more penalties and then even possible enforcement like IRS liens, IRS levies, and things like wage garnishments. The second step, if you cannot full pay your tax liability, is to pick an option. There are options to full paying the IRS. Now you have to pick which option is best for your circumstances, and you must qualify for each one of the options. The 4 options are basically this: an extension to pay, where you can get up to 180 days. Extension to go ahead and pay your tax bill with the IRS per tax year. This is a one-time extension. The second one is the most common option, which is a payment plan. Now, if you owe less than $50,000 and can pay within 72 months, getting into a payment plan is fairly easy with the IRS. Those are called streamlined installment agreements if you can meet those terms, and you can even do those online. There are other types of payment plans if you owe more than $50,000, but you have to negotiate the terms with the IRS. Now, the third and fourth option are what we would call hardship options. The first hardship options, if you can't pay the IRS, that means you don't have assets or you can't pay them in monthly payments, you can get into what's called currently non-collectible status. You have to prove that you can't pay to the IRS, but you can get into that status. Now, the fourth option is the settlement option. This means you cannot pay the IRS with current assets or future income before the IRS's ability to collect ends, which is called the collection statute expiration date. It's 10 years from the date that tax is assessed. Now, if you can prove to the IRS you can't pay with your assets and future income, you may qualify for the offer in compromise. Now, if you get an offer in compromise, you will have to pay what's called an offer amount. The offer amount is a computed amount. You'll have to go ahead and pay that offer amount and also meet other terms of the offer and compromise program. So that's your second step, pick an option. Your third step is to get into that option, get into an agreement with the IRS. And so that agreement could be an extension to pay, or if it's one of those streamlined installment agreements, you can do those fairly easily online. All other agreements are really going to require you to go ahead and work directly with the IRS to get into that agreement. And that includes filing financial information and supporting documents to go ahead and prove your ability to pay. Now, this is very, very important. Now, if you have back taxes and you need to get into an agreement with the IRS, you have to be what's called filing compliant. That means you have to have filed all your back tax returns. That's individuals, that's usually the past 6 years before you get into an agreement, and it includes all the balances for all the outstanding years. You can't do one agreement on 1 year and another agreement on another year. So that's very important. You need to be in filing compliance. Now, the last step after you get into an agreement is to stay in compliance and meet the terms of that agreement. So that means filing your tax return annually on time, and if you owe on future years, paying the balances owed. Now, it also means, based upon whatever agreement that you get into, that you meet those terms. Like if it's a payment plan, you need to make the monthly payments as scheduled. Setting up by direct debit is usually the best way to make sure you avoid missing those monthly payments with the IRS. If it's another agreement, for example, like an offer in compromise, you have to meet the terms of the offer in compromise, which means usually paying the offer amount and staying in compliance for the next 5 years. So those are the 4 steps. Now, lastly, I want to point out something to you. What happens a lot of times is taxpayers get into agreements with the IRS, but they continue to owe back taxes. So the thing that you need to do after you get into this agreement is not file late, not owe an additional year. So adjusting withholding if you're a wage earner, if you're a small business owner, making estimated tax payments, making sure you do not file and owe in future years. That is, stop the tax debt right there so that you get into this one agreement and you stay in compliance with the IRS.